Welcome back to MonsterInvest. I'm Daniel. I want you to close your eyes for a second. Imagine you are standing in the middle of a trading floor in the 1980s. Phones are ringing off the hook. People are shouting, sweating, throwing papers in the air. The energy is frantic. It's pure chaos. Now fast forward to today. You are sitting in your living room. It's silent, but open your phone, check Twitter, check the financial news, and that same chaos is there. It's just digital now. The panic, the euphoria, the fear that you are missing out, the terror that you are losing everything. The medium has changed, but the human animal hasn't. We are still driven by the same chemicals, the same instincts, and the same flaws that we had thousands of years ago. Today we are going to slow down. We are going to step away from the noise. We are going deep into a philosophy that was forged not in a classroom, but in the fires of war, plague, and political exile. We are talking about Stoicism. But this isn't a history lesson. This is a survival guide. Today's episode is The Stoic Investor, the ultimate guide to mastering your mind in modern markets. Over the next 20 minutes or so, we are going to dissect why the smartest people in history, like Isaac Newton, lost fortunes in the stock market and how you can avoid their fate. We will learn the ancient techniques of the Stoic archer, the view from above, and the concept of amor fati. By the end of this episode, you won't just be a better investor, you will be a happier one. So get comfortable, let's begin. Part 1: The Madness of Geniuses. We often think that being a great investor requires a high IQ. We think if we can just crunch the numbers better than the other guy, we will win. Let me tell you a story about one of the smartest men to ever walk the earth, Sir Isaac Newton. Newton invented calculus. He formulated the laws of motion and gravity. He was a certified genius. In the spring of 1720, Newton owned shares in the South Sea Company. It was the hottest stock in England. Everyone was talking about it. Newton made a nice profit. He doubled his money and sold. He was happy. He exercised discipline. But then something happened. The stock kept going up and up and up. Newton watched his friends, people far less intelligent than him, getting rich. They were buying carriages and estates. They were bragging at parties. Newton, the man of logic, began to feel something very illogical. He felt envy. He felt FOMO, the fear of missing out. He couldn't stand it, so he jumped back in. He bought back into the South Sea Company at the very peak, investing almost his entire fortune. You can guess what happened next. The bubble burst. The stock price collapsed. Newton lost £20,000, which in today's money is millions. He was devastated. He famously said, "I can calculate the motion of heavenly bodies, but not the madness of people." Newton failed not because he wasn't smart. He failed because he wasn't a Stoic. He allowed external events, the rising price and the opinions of others, to dictate his internal state. He reacted to the market instead of sticking to his principles. This is the trap we all face. We are all Isaac Newton in a way. When we see our neighbor making money on a meme coin, or we see a tech stock rallying 50% in a month, our biology takes over. We abandon our strategy. So how do we fight this? We turn to the Stoics. Part 2: The Dichotomy of Control. The first and most important lesson comes from Epictetus. He was born a slave. He had a crippled leg. He owned nothing. Yet he became one of the most free men in history because he understood one fundamental truth: the dichotomy of control. Epictetus said, "Make the best use of what is in your power and take the rest as it happens." In investing, we are constantly tortured because we try to control things we cannot. Let's list the things you do not control. You do not control inflation. You do not control the Federal Reserve. You do not control if a CEO tweets something stupid. You do not control the price of a stock from minute to minute. If you tie your happiness to these things, you are guaranteed to be miserable. You are a slave to the market. If the line goes up, you are happy. If the line goes down, you are sad. The market owns you. Now what do you control? You control your research. You control your asset allocation. You control your time horizon. You control your costs and fees. And most importantly, you control your emotions. The Stoics used a beautiful metaphor for this: the archer. Imagine an archer. He has done everything right. He has checked his bow. He has chosen a straight arrow. He has pulled back the string, aimed perfectly, and focused his breathing. He releases the arrow. The moment the arrow leaves the bow, it is no longer in his control. A gust of wind might blow it off course. The target might move. A non-Stoic archer would scream at the wind. He would cry if he missed. He would judge his worth by whether he hit the bullseye. But the Stoic archer knows that his success was in the process. Did he aim well? Did he prepare? If yes, then he has succeeded, regardless of where the arrow lands. In investing, you are the archer. Your research and your strategy are the aim, the return you get in any given year. That's the arrow flying in the wind. If you make a sound decision based on good data, and you lose money because of a random geopolitical event, you shouldn't beat yourself up. You aimed well. The wind just didn't cooperate. Conversely, if you gamble on a risky stock and get rich just by luck, you shouldn't celebrate. You aimed poorly and the wind saved you. That is not skill, that is luck, and luck eventually runs out. Focus on the aim, not the arrow. Part 3: The View from Above. Now let's talk about perspective. Marcus Aurelius was the emperor of Rome. He was the most powerful man in the world. He had every reason to be arrogant or stressed. He led wars on the frontier. He dealt with a plague that wiped out a huge portion of the population. To keep his sanity, he practiced something called the view from above. He would imagine himself floating high above the earth, looking down. From that height, the borders of countries disappear. The armies look like ants. The drama of the royal court seems insignificant. How does this apply to your portfolio? Open up a stock chart, zoom into the one-day view. It's jagged, it's volatile, it looks scary. A 2% drop looks like a cliff. This is the view from the ground. It's stressful. Now zoom out, look at the 1-year chart. It's a bit smoother. Now zoom out to the 10-year chart. Now look at the 100-year chart of the S&P 500. What do you see? You see a line that goes up and to the right. The crashes of 1987, 2000, 2008, they look like tiny blips on the radar. When you are panicking because your portfolio is down this month, you are stuck on the ground level. You need to take the view from above. In the grand scheme of your life, investing for 20, 30, or 40 years, this week's news is noise. It is irrelevant. The pundit screaming on TV about the end of the economy is just an ant shouting at another ant. The Stoic investor thinks in decades, not days. This perspective is a superpower. It allows you to hold through the volatility when everyone else is selling. Part 4: Premeditatio Malorum, the premeditation of evils. This next concept is perhaps the most practical tool you can use. It is called premeditatio malorum. Most financial advisors will tell you to be optimistic. Stocks go up in the long run. Think positive. The Stoics would disagree. They believed in negative visualization. They believed you should vividly imagine the worst-case scenario before it happens. Seneca said, "Unexpectedness adds to the weight of a disaster. The man who has anticipated the coming of troubles takes away their power when they arrive." Let's do this exercise right now. I want you to imagine that tomorrow the market crashes, not a correction, a crash, 50% down. Your portfolio value is cut in half. The news is talking about a Great Depression too. Your friends are selling. You open your account and see a number much smaller than you are used to. Sit with that feeling. Does it make you sick? Does it make you want to sell? If the answer is yes, then your risk tolerance is too high. You are holding too much risk. By visualizing this disaster now, while you are calm, you can make changes. Maybe you need more bonds, maybe you need more cash. But more importantly, when the crash actually happens, and it will happen eventually, you won't be shocked. You will say, "Ah, I have visited this place in my mind. I knew you were coming." While others are panic selling because they are surprised, you are calm because you are prepared. You have mentally rehearsed this. You treat the crash not as a tragedy, but as a standard winter season in the market cycle. Winter is cold, yes, but we know it comes every year. We don't scream at the snow, we put on a coat. Part 5: Amor Fati, Love of Fate. This leads us to the most advanced Stoic concept, amor fati, a love of fate. Friedrich Nietzsche, though not a Stoic, popularized this term, but it is deeply rooted in Stoic thought. It means not just accepting what happens, but loving it. How can you love a bear market? That sounds crazy, right? A regular investor hates a bear market. They see red numbers and feel pain. A Stoic investor accepts the bear market. But a master Stoic investor loves the bear market. Why? Because the bear market is the opportunity. Marcus Aurelius said, "The impediment to action advances action. What stands in the way becomes the way." The crash is not an obstacle to your wealth. The crash is the path to your wealth. When the market is down, stocks are on sale. Dividends are being reinvested at lower prices, buying you more shares. If you are a net buyer of stocks, which most of us are, you should want prices to go down, not up. Imagine you are going to the supermarket to buy steaks. Do you want the price of steak to double? No, you want it to be 50% off. The stock market is the only store where customers run out the door screaming when things go on sale. The Stoic investor practices amor fati. Market up, good, my net worth grows. Market down, good, I can buy more assets cheaply. Inflation high, good, it forces me to be more disciplined with my spending. Inflation low, good, my purchasing power is stable. No matter what the world throws at you, you turn it into fuel. You don't just survive the chaos, you benefit from it. This is what it means to be antifragile. Part 6, the discipline of enough. Now we have to talk about the destination. Why are we doing this? Why do we want more money? Seneca was a very wealthy man, but he lived simply. He said, "It is not the man who has too little, but the man who craves more, who is poor." Modern markets are designed to make you feel poor. No matter how much you have, there is always someone on Instagram with a better car, a bigger house, or a better performing portfolio. If you don't define what enough looks like for you, you will run on the hedonic treadmill until you die. You will reach 1 million and you will want 2. You will reach 2 and you will want 5. You will take unnecessary risks to get there. The Stoic investor sets a goal. I need this much to be free. I need this much to protect my family. Once you know you're enough, you become immune to envy. You don't care if your neighbor made 1000% on a crypto gamble, because that doesn't help you reach your goal. It's irrelevant noise. Investing is about purchasing freedom, not purchasing status. Part 7, a modern routine for the Stoic investor. We've covered a lot of theory. Now, I want to give you a practical routine. How do you actually live this out? Step 1, the morning reflection. Before you check your phone, before you check the markets, take 2 minutes. Remind yourself, I do not control the market today. I only control my actions. Prepare yourself for volatility. Step 2, automate the process. Stoics believed in systems to reduce the chance of human error. In investing, this means automation. Set up automatic deposits. Automatic rebalancing. Remove the decision-making from your emotional brain. Don't rely on willpower. Rely on a system. Step 3, journaling. Marcus Aurelius wrote Meditations as a personal journal. He was writing to himself to keep his mind straight. You should do the same. Keep an investment journal. When you feel the urge to sell, write it down. I feel scared because the news said X. Usually just writing it down allows the emotion to pass. You can look at it objectively and say, that is fear speaking, not logic. Step 4, memento mori. Remember you will die. This sounds morbid, but it's vital. It reminds you that money is a tool, not the goal. Don't spend your whole life stressing over charts and forget to actually live. Don't trade your time, your most limited resource, for money you don't need. Conclusion and summary. We are coming to the end of our journey today. We have traveled from the trading floors of London in the 1700s to the philosophy schools of ancient Greece. The world is noisy. It wants you to panic. It wants you to click. It wants you to trade. The financial industry makes money when you move. You make money when you sit still. The Stoic investor is a rock in a turbulent river. The water rushes around him, the foam crashes, but the rock remains. Let's recap the key lessons from today's episode. If you take nothing else away, remember these 4 pillars. Number 1, the dichotomy of control. Stop obsessing over the Fed, the economy, and the prices. You are the archer. Focus on your aim, your process, not the arrow. Number 2, the view from above. When in doubt, zoom out. Don't get lost in the daily noise. Look at the decades. History favors the patient. Number 3, premeditatio malorum. Visualize the crash. Expect the downturn. Be the person who buys a winter coat in July so you aren't freezing in December. Number 4, amor fati. Love the market in all its moods. When it crashes, thank it for the opportunity to buy. When it soars, thank it for the growth. Use every circumstance to your advantage. Investing is the greatest game in the world, but it is played entirely between your ears. If you can master your mind, the money will follow. Thank you for listening to this deep dive on MonsterInvest. I hope this episode gives you a shield to carry into the market tomorrow. If you found value in this, take a moment to reflect on your own portfolio. Are you acting like Julian or Alina? Are you Isaac Newton, or are you Marcus Aurelius? Stay rational, stay patient, and remember the obstacle is the way. And one last thing, if this episode helped you find some calm in the chaos, please hit that like button. Share this with a friend who might be stressed about the markets right now. And if you haven't already, make sure to subscribe to the channel. We are building a community of rational investors here, and we'd love for you to be a part of it. I'm Daniel, this is MonsterInvest. Until next time.